Hello everyone, thanks for joining us today. Today we're going to talk about the new ACE commercial products, and with us our featured guest speaker, Christopher Boylan, the Business Development Manager for ACE. And Chris, if you'd like to take it from there, tell us a little bit about it.
Right on. Thank you very much, Jerry. All right, so looking at the attendee list, looks like we've got a nice sampling of people here across the country. And what I really wanted to kind of go over with you guys is just sort of a 10,000-foot overview of some of the new products that are coming out with ACE this year. I know many of you have used Stuckey and Company in the past for some of the specialty programs, like the IT monoline program that they have with ACE. And I represent commercial risk services, which, if I get the screen going there, basically, commercial risk services is a unit at ACE that was developed about 4 years ago. We've always done small business, and we've always done it well, but we really sort of formed a dedicated unit to address those needs approximately 4 years ago, and that's who I represent. I'm the Business Development Manager for the Kansas, Missouri, and Nebraska region, and that's kind of why I'm here today. We wanted to take a few minutes just to kind of educate you guys on some of the changes going on and some of the products that you can look to see from us in the coming year. As you can see on your screen up there, we put up a little kind of a tentative schedule. We're going to try and do these every month or so. We're going to try and focus on some different topics to give you guys a full education on what ACE can do in our CRS unit so that you guys can fully utilize some of the products that we have available. Basically, I'm going to focus on 4 areas today. In our unit, we have approximately 12 product lines. If you look at your screen up there, the 4 bullet points at the bottom, the BOP, the Vacant products, the liquor, and the umbrella, 3 of those are brand new to us, and 1 of those is in the process of being expanded a little bit. So basically, in the next 20 to 30 minutes, that's essentially what I'm going to spend my time talking about, just giving you sort of that overview of what we're looking for and what we're having success in and where we are currently writing these products. The slide I've got up there right now is basically everything we do in our unit. Now, I'm obviously not going to talk about all of that today, but over the course of the next few webinars, that's sort of everything we're going to be discussing. I sort of broke it up there into commercial, professional, environmental, and specialty lines. And I'm not going to go through those bullet point by bullet point, but I just wanted to include that just so you guys know the full breadth of what we can do in our unit. As you can see, we've got some sort of niche specialty products like the contractor's pollution or the tank safe. And we have some things you've probably seen pretty often, especially from your interactions with Stuckey on the professional liability side. Like the management liability or the technology E&O piece. So the first one of the 4 I'm going to focus on today is the BOP product. And I'm going to use that term kind of loosely. When I say BOP, it's a GL and property-driven product, obviously. We, of course, would like to write a lot of the GL, and we are including the property. We're not trying to be property-heavy. But right now, today, we are in phase 1 of our rollout. That started on February 28th of this year, and as you can see from the slide, we are live right now in 17 states. And just to kind of make the point, it's the state of domicile. So if you're working in Illinois right now and you have an insured that sits in California, California is currently live, so that's an area we would be looking to write this business. As you can see up there as well, we're sort of focusing during the rollout on approximately 140 class codes. And I broke them down by the 5 bullets underneath that, which I'll go through those in a little bit more detail here in a second. But basically the office, service, retail, artisan contractors, and some 1 to 4 unit dwellings are our focus right now. I mentioned we're in phase 1. Phase 2 hits in June. It's actually June 27th, and that's when we'll be adding 11 more states. And then phase 3, which completes the BOP rollout, hits in September. So we're almost there. We're right around the corner, and really you guys will probably be working on renewal business here that would qualify for some of that. So that's why we're having this conversation now. We wanted to kind of get this in front of everybody and let you know what's going on. And as you can see there, with the phase 2 and 3 rollouts, there are some additional enhancements coming out. For example, phase 2 there, we're including, it's an embedded EPLI option. We're going to be including umbrella quotes with all of our BOP quotes. We're going to be adding, it's actually not even up there, but we're going to have a special event form that comes out in October. So basically the point I'm trying to make is there's a lot of change coming. We're opening up our underwriting box, and there are good things coming for the rest of 2015. To focus on the property portion of our product, it's obviously we're looking to cover the buildings, some BPP, and the improvements and betterments. There is a very, very long list of optional coverage, and there's no way I could go through all that in this webinar at this level. But what I did include were some of the automatic coverages that are built in with our product, and it's probably pretty small to see on your screen up there, but just to pull out a couple of the highlights for you. For example, we're including extended business income for up to 60 days. That's pretty important because that's going to allow them to keep their business going during a loss. Could also reduce your BI. We're including pollution cleanup. That's good because there's always a lot of limitations and restrictions in that area. And of course, we've got, like at the bottom there, we've got the fungi, which is basically your mold remediation coverage. As far as the exclusions themselves, this is an ISO-based product form, so there's really nothing that I would call out of the ordinary there. It's pretty standard stuff. You know, your government action, nuclear, war, flood, nothing crazy. I know a couple people have asked about earthquake, and I will tell you we are looking at expanding that as an option, but right now today there's nothing formal, so I did want to include that and just touch on that. As far as the GL, again, pretty standard kind of stuff. We're looking to cover the premises, the products, and of course the personal and advertising injury. We can do the medical expenses at 5 or 10K. Contractual liability is included. Mobile equipment is included. I mentioned some of the optional coverage. That's sort of a scaled down listing there, but as I mentioned, there are lots of optional coverages available. So if you have something you need, just send it in with the submission and let us know what you're looking for, and we can probably get it done for you. I mentioned there were 5 sort of subcategories that we were going to sort of focus on. These next few slides, I'm really not going to spend a ton of time going through the nitty-gritty on them, but I wanted you to sort of see what the rollout appetite is. So for example, the first one I listed was the 1 to 4 unit dwellings. And basically we're looking, I mean, you can't say much more than that. It's basically single and multifamily dwellings, residential condo units leased to others. Obviously we can look at single locations or schedules. Artisan contractors, that's number 2. This is a non-admitted play for us, and I'll go into this in a second, but most of the BOP quotes you'll see from us are going to be on an admitted basis. The contractors, we're going to do that on a non-admitted play, but right now we're already looking at over 35 classes, and I listed a few of them up there for you. Probably things you're pretty familiar with: carpenters, electrical workers, landscapers, plumbers, you know, your typical artisan contractor risk. Looks like a question just popped in asking if we write GCs. Not at this time. I listed some of those key features on the right-hand side there as well. We're going to include the blanket AI for the additional insured, and we do have an ACE Premier endorsement that we will be including as well. Number 3, 4, and 5 I sort of grouped together on the same slide here because they represent over 100 of those 140 classes we kind of talked about. Again, nothing crazy, but I listed a few there: the medical offices, law offices, gift shops, salons, photographers. That's the area we're looking to grow in during our rollout. And let's see, just on the right-hand side there as well, again, we can include hired non-owned, mechanical breakdown, and direct bill is an option for these classes of business. Just to kind of point out too, I kind of just went through those at a very high level. Those 5 categories at approximately 140 class codes, that's during our rollout. We will be looking to expand our appetite as we get further into the year and into 2016, but that's basically what we're looking for right now. So if those are anything that you guys are seeing on a regular basis, we're probably going to be pretty competitive on it. and that's about that. I threw a slide in there for some noteworthy. Kind of mentioned the admitted and non-admitted basis. Most of what we see is going to be admitted. That's the idea. We actually have 4 different writing companies. 3 of them are admitted. We've reserved that 4th one, for some of the contractor classes, maybe someone who's got a claim history, perhaps somebody that has maybe a bad insurance score. So we're going to reserve that 4th one, but the idea there is to have a lot of admitted options for you. As you can see, the minimum premium I listed there is at $495, and just to reiterate, this is an ISO-based product. Focus number 2, I purposely did this one second in the order. We can write umbrellas today, and again, I use the term umbrella pretty loosely, like I use BOP. This is a follow-form excess coverage. Right now, today, we're looking at around 700 classes of business. We do it on an admitted basis, and it's available everywhere except Alaska, Louisiana, and Vermont. The key that I want to kind of drive home here, the point I want to make, is that we already write a ton of these, and we have a huge appetite, but that's going to continue to grow. So for example, say you had an artisan contractor today. Today, we will not look at a contractor's umbrella, but as soon as we get into the summertime and this rolls out with our BOP, this is going to be a focal point for us. We're going to be expanding our umbrella appetite, and you're going to see us offering umbrella quotes with any other GL or property quote that we throw out there. As you can see, I threw in the minimum premium, $500 per layer. It's very competitive in the marketplace. Again, right now today, these are on admitted basis. And then I did throw in there that we do, as a general rule, we do need to see the underlying coverage have an AM Best rating of A6 or higher. Just a second ago, I mentioned that we're obviously rolling this out and expanding our box. Today, it's all admitted, but you're going to also see some non-admitted options going forward. For example, like I mentioned, the contractor classes. So you're going to have a BOP quote. Say it's September in Missouri. You send in a contractor, we quote your BOP. We're also going to give you an umbrella quote. And as you can see there, the minimum premiums are going to vary a little bit based on some of the classes, but still very, very competitive in the marketplace. I'm not really going to spend a lot of time talking about the attachment points, but I wanted to include a slide just so you could see what it is as a reference point. I'll kind of go over some of that later on. And again, just to kind of follow the form, we can look at literally hundreds of classes. Some of the ones we prefer to look at and are most competitive, your real estate, restaurant, office service retail, hotels, and we look at some light manufacturing as well. Moving along to number 3 on our list of 4 here. Again, not a ton to say, but we are now looking at vacant building and vacant land as a separate product line. Basically, I've got a slide up here for building and one for land. And just to kind of go over some of the key features on this, we can look at up to $5 million in your TIV. We can do up to 1 mil 3 mil limits on the GL. We can consider your special form and your replacement cost. We do not have any length of vacancy restrictions. We can look at locations that are currently undergoing some renovation work. We don't like the structural stuff. And it's also pretty customizable. We can do policy terms of 3, 6, or 9 months. So there's definitely some flexibility to, in that area. And sort of mirroring the building is the land portion. Pretty similar. 1-3 limits on the GL. We can go up to 1,000 acres per location. No vacancy restrictions. And just to point out as well, we can also look at locations that do have exposures with lakes or ponds on the premises. And like the building, again, 3, 6, or 9 month terms are available. I purposely threw this slide in just as sort of a noteworthy item, kind of a listing. I want to point out, especially at the bottom of the page, the bottom 3 I think are pretty important. We can consider partially vacant. I know there are some competitors out there that won't look at it, and this is an area where I think you might find a lot of success with us. We will not throw in inspection fees. And then here's the biggie. Right now today, this product is actually live nationwide, but we are in our rollout pilot phase, per se. And if you look at that state list at the bottom, I can tell you it's kind of a bummer for me sitting out in the Midwest, but I know a lot of you are sitting nationwide or writing nationwide. And as you can see there's really not a lot of appetite in the Midwestern region. And the rationale for that is, quite frankly, the activity with the winds and the hail and the tornadoes was just something we wanted to sort of minimize during our launch phase. So this may change down the road, but for right now today, we are pretty much avoiding the wind-hail states, and that's why I listed that at the bottom. So I wanted you to be aware of that. And then the last one on our list of 4 for the day is the liquor liability. This is, quite frankly, a product that's been selling itself in every state that we've launched. This is a monoline liquor product, and we will have a special event product coming out later this year. But right now today, it's monoline liquor. By the time you get to the end of the 2015 calendar year, it will be live in 43 states, and that includes Illinois and Iowa as part of our rollout plan. So stay tuned for updates there. But basically, this is just that. It's literally monoline liquor, and this is one of those that is always going to be quoted on a non-admitted basis. For any of you that work with liquor, you probably know it's sort of a volatile market area, and we're going to reserve that for the non-admitted play. I won't go into too much of the pricing structure because you're going to find it varies in different territories. But as far as the appetite itself, this is where we are really looking to be a key player. I put the target classes up there, and of course those are the ones that an underwriter would most like to see for this line of business. Nothing out of the ordinary there. Bars, restaurants, fraternal clubs, dinner theaters, comedy clubs, nothing crazy. But what we're also looking to do is maybe some of the things that are, I'll say, tricky from an underwriting standpoint. We can look at unlicensed classes like your caterers or maybe a BYOB operation, charter boat dinner cruises. We can also look at, I called it a higher hazard class, things like nightclubs, adult clubs, or bowling alleys. Those are all things we're looking to write. So really we're playing in the entire space, and so far the feedback has been pretty well. We're doing it in a controlled manner. One of the reasons we're having so much success for it, that very top bullet point on that slide, the assault and battery coverage is provided on almost all risks. And think of maybe what I would call a scarier risk, maybe an adult club. We still have the opportunity to include the A and B. We're going to sublimit it to 100, 300, but it's still included. And aside from those sort of one-off higher exposure classes, it's going to be included on almost every risk. So right there, that's a huge selling point. Another huge selling point is that defense costs are outside the limit. And that's that second bullet point there. There's no cap on your defense costs. Those top 2 are pretty much selling this product for you. Scrolling down there, from an appetite acceptability standpoint, we can look at risks that have the bouncers and the major entertainment. The coverage form does not have a deductible. We include automatically the liquor license holder as an additional insured. And that last bullet point I wanted to I threw a lot in there, but the point I want to make is our minimum premium on this line is pretty low, and we can also see some pretty expensive quotes as well. This is a wide range of exposure we're looking at. So the credits available, say you've got a risk that attended tips, or maybe it's a restaurant that closes early, or it's super secure and they're using surveillance cameras, or maybe it's a club that's using ID scanners. Not a single one of those are required to get a quote, but if they're using these types of procedures, they're going to get rewarded for it. We're going to build credits into our rating structure for them. So right off the bat, you know that if you've got a good risk on your hand, we're going to be competitive because we're rewarding them when it comes to their premium. I kind of mentioned some of this already. We do have a special event form that's coming out in October of this year. The quote-bind issue, quite frankly, we're trying to make it easier for companies like Stuckey to process these requests for you. From an underwriting standpoint, we will look at new ventures for most classes. I did point out in that slide in that top bullet point, In some states, the nightclubs or adult clubs do need to be in business for at least 2 years, but aside from that, pretty wide appetite. And the last bullet point there, that's a huge one, especially when you see a lot of these carriers that are grouping your GL and your liquor together. We will not cap the sales for alcohol in our acceptance criteria. So if you've got a bar that has 100% of their receipts from liquor sales, that is not a problem. We welcome them with open arms. I mentioned that we're still in the middle of the rollout here. Quite frankly, this is, of all the products I've talked about today and all the ones you'll hear about in the future, this is the one where we're in the least territory today. At last count, and I apologize, I don't have it in front of me, I believe it was 18 states. But we will be in 43 by the end of the year. A lot of the Midwest region states are going to start hitting here in summer and a little bit shortly after. Around the country, I think I've got a list. Yes, I'll get you a list here in a little bit. But I wanted to point out, too, on this slide, no fees or inspections are included as well. And we will only audit if they have 5K in premium or higher. Apparently, there are some issues that some people see with beer and wine sales only. We are not restricting that. So again, very open appetite here. And I sort of mentioned this earlier. The formal alcohol awareness training is not required, but again, it will be reflected in the premium if they do that, because it's going to be a credit that they receive. This slide sort of highlights sort of a generalization of what I've kind of been preaching, that we're in phase 1 now. Phase 2 hits in June, and phase 3 hits in September. And I'm not going to go through this in a lot of detail. I've kind of been touching on it through the whole discussion. But basically, we're adding the 11 more states in June for the BOP line. The rest will go live in September. And for the liquor is a little bit different. The liquor is not quite as exact, I'll say. The liquor is sort of on a state-by-state basis. So stay tuned, and I'm sure you'll be getting updates here from ACE and Stuckey as well as to what's available and when. And guys, that's pretty much it. I just wanted to kind of talk about those 4 product lines at sort of that high-level overview, just to let you know some of the changes that are going on. Again, primarily because I think in the past, most of you have used us, ACE specifically, as a professional lines market. We wanted to kind of spend some time going over some of the changes that we're dealing with right now in 2015. And it's an exciting time, and we're looking forward to rolling out more products throughout the years. And with that, I'll give it back to Jerry. Thank you.
Well, thank you, Chris. Very informative. It is exciting to see all these new products become available. We do expect a lot of questions. Feel free to send those via email, and we'll answer those individually. And also feel free to send any submissions to my contact info, jerry@stuckey.com. And we'd love to get started writing business with you. And stay tuned for more updates and more rollouts.
Thanks, everybody. Have a great afternoon.
Thank you very much. Have a good day.